A seismic shift is underway in East Africa, one that is reshaping the region's future in ways few could have predicted just a decade ago. For years, Ethiopia stood tall as the region's economic giant, powered by a massive population, ambitious infrastructure projects, and a state-led development model that drew global attention. Addis Ababa, home to the African Union, was more than a capital. It symbolized continental leadership and hope for African unity. But now, the winds have changed. Kenya is taking the crown, emerging as the new economic powerhouse of East Africa. This is more than just a shift in numbers. It's a dramatic reordering of power, influence, and opportunity across the region, affecting millions of lives. Kenya's rise is built on digital innovation, a resilient service sector, and deepening global financial ties. Its tech ecosystem is thriving, and its cities are buzzing with entrepreneurial energy. Meanwhile, Ethiopia faces a reckoning. Its once-praised growth model is faltering amid internal conflict, political instability, and a rapidly collapsing currency. The impact is real and immediate. Investment, trade, and diplomatic influence are all shifting, redrawing the region's economic landscape. Nairobi is now the hub for multinationals, tech startups, and international financiers, attracting talent and capital from across the globe. Ethiopia's loss is both a blow to its prestige and a practical challenge for recovery, as businesses close and opportunities dry up. The regional balance of power is being redrawn, with new alliances and rivalries emerging. As of October 2025, the economic map of East Africa has changed, and the world is taking notice. In this series, we'll explore the numbers, compare the divergent paths of these two nations, and look ahead to what this transformation means for the region's future. A new chapter is being written in East Africa, and its outcome is far from certain, with challenges and opportunities on the horizon. The numbers are clear. Kenya's GDP is projected to hit $132 billion by the end of 2025, overtaking Ethiopia's $117 billion. This marks a pivotal moment for East Africa, as Kenya steps into the economic spotlight, reshaping the region's financial landscape. That $15 billion gap marks a dramatic reshuffling of the region's economic order. It's not just a statistic, it's a signal of shifting fortunes, with Kenya pulling ahead after years of close competition. Just a few years ago, Ethiopia was the darling of development economists, posting near double-digit growth. Its cities buzzed with new construction, and optimism was high for a future of prosperity. But Ethiopia's state-led model has faltered, hit by political instability and currency turmoil. The promise of rapid growth faded as unrest and economic missteps took their toll. The Kenyan shilling surged 21% against the US dollar in 2024, boosting Kenya's global economic standing. This currency strength has given Kenya a new edge, making it more attractive to international investors and businesses. Meanwhile, Ethiopia's birr lost over 55% of its value in a single devaluation, slashing its GDP in dollar terms. The impact has been severe, eroding savings and undermining confidence in the economy. A strong shilling has made imports cheaper and attracted investors to Kenya. Businesses are expanding, and consumers are benefiting from lower prices on imported goods. Ethiopia's weak birr has fueled inflation and made debt repayment harder. Everyday life has become more expensive, and the government faces mounting pressure to stabilize the economy. The currency story is central. It's not just about rankings, but about the structural strengths and weaknesses shaping both economies. Exchange rates reflect deeper realities, from policy choices to investor confidence. Kenya's momentum is real, and Ethiopia's crisis is deep. The contrast between the two nations has never been more stark, with one surging forward and the other struggling to regain its footing. The numbers reveal the forces driving this new reality, telling a story of ambition, resilience, and the challenges that lie ahead for both countries. Kenya's remarkable rise is no accident. It's the result of building a diversified, resilient economy over many years. Agriculture remains strong, but services, finance, telecom, and tourism now drive much of the country's growth and transformation. Nairobi's Silicon Savannah is a continental tech hub, home to M-Pesa, and a thriving, innovative startup scene. This digital dynamism attracts global venture capital and creates high-value jobs for Kenya's young workforce. The shilling's strength in 2024 drew in foreign investment, as seen in Kenya's successful Eurobond and record-breaking diaspora remittances. Kenya's access to the Indian Ocean and strong Western ties give it a unique and strategic edge. Despite recent protests, Kenya's open, innovative economy has proven remarkably resilient. These powerful factors have propelled it to the very top of East Africa's economic landscape. Ethiopia's rapid growth was built on massive infrastructure projects and external debt. But this model depended on stability and tight government control, both now in crisis. The birr's collapse, after years of artificial overvaluation, triggered inflation and slashed the economy's dollar value. Political conflict, especially in Tigray, shattered investor confidence and disrupted supply chains. Tensions over the Grand Ethiopian Renaissance Dam add regional uncertainty. Ethiopia's state-centric model proved brittle, unable to adapt to shocks. Now, the country faces the daunting task of stabilizing its economy and rebuilding trust. The path back to the top will be long and difficult. Ethiopia's stumble is a cautionary tale for the region. As Ethiopia struggles, Nairobi is cementing its status as East Africa's economic center. Multinationals now choose Nairobi for its stable regulatory environment, liberalized markets, and skilled workforce. Kenya's Eurobond success in 2024 signaled global investor confidence. Capital is flowing into everything from tech startups to renewable energy. Nairobi's influence extends beyond business. It's a diplomatic and cultural hub, home to the UN and major NGOs. Kenya's growing economic clout gives it more weight in regional bodies. In contrast, Addis Abeba's economic influence is waning, with construction slowing and optimism fading. Currency shortages make Ethiopia less attractive for foreign firms. Nairobi's gravitational pull is reshaping investment and supply chains across the region. Looking ahead to 2030, two distinct scenarios emerge for East Africa's economic rivalry, each with the potential to reshape the region's destiny. The choices made in the coming years will determine which path the region follows, and the stakes could not be higher. In the first scenario, Kenya consolidates its lead by maintaining policy stability, investing heavily in infrastructure, and deepening its global ties. The government's commitment to long-term planning and openness to international partnerships gives it a competitive edge. Nairobi, already a regional powerhouse, becomes the unchallenged hub for finance, trade, and technology, drawing in both investment and top talent from across Africa and beyond. The city's vibrant innovation ecosystem cements its status as a magnet for entrepreneurs and multinational companies. However, Kenya must also manage growing social unrest and ensure that economic gains are shared widely. Balancing fiscal discipline with the need to protect and uplift its citizens will be a constant challenge for policymakers. If Kenya succeeds, its dominance could become long-term, fundamentally reshaping regional trade, investment flows, and political influence throughout East Africa. The second scenario envisions an Ethiopian comeback, with the country regaining its momentum and challenging Kenya's lead. For this to happen, Ethiopia must achieve lasting political stability, bring inflation under control, and successfully restructure its mounting debt. These steps are essential to restore investor confidence and unlock new growth. Accelerating reforms in banking and telecom and unleashing the private sector's potential are crucial for Ethiopia's resurgence. A dynamic business environment could spark innovation and job creation on a massive scale. With a population exceeding 120 million, Ethiopia's vast domestic market is a powerful asset if properly harnessed, offering opportunities for growth that few other African nations can match. If these reforms succeed, Ethiopia could re-emerge as a formidable economic force by 2030, challenging Kenya's dominance and transforming the regional landscape. Ultimately, the outcome of this rivalry will define East Africa's future, shaping the lives and opportunities of millions across the region for years to come. Is Kenya's supremacy here to stay, or is it just a fleeting moment while Ethiopia regroups? Kenya's diversified economy and global connections suggest its lead could endure, but Ethiopia's vast population and potential mean it can't be counted out. If Ethiopia achieves peace and reforms, it could rebound quickly. External factors, global markets, climate, geopolitics, will shape both countries' futures. Kenya's Western ties give it an edge, but Ethiopia's partnerships in the Middle East and Asia offer alternatives. The competition for influence and investment will be fierce. The next 5 years are critical. Will Kenya's model become the blueprint, or will Ethiopia's scale and ambition win out? The outcome will shape East Africa's destiny for a generation. The world is watching as this great regional rivalry unfolds.